$200 oil. Is that happening? Is the real story about what Scott Bessent does, both on the geopolitical front and with the yen? Are the Iranians more afraid of Scott Bessent than they are of other politicians? I think you should start looking at Scott Bessent as the guy who holds all the cards. I also think you should start looking at Scott Bessent as the guy who can force the Fed or coordinate with the Fed to turn on the printing press to save the yen. This is something that we've talked about, Toby has talked about, and now we have Arthur Hayes talking about it. We're going to go over the specifics as it relates to Bitcoin. In other words, if oil's going to $200, it's a pretty short stream. Bitcoin hits a big trend line, oil goes to 200, the situation gets out of control, and that's it. Now, if that doesn't happen, is there a dual catalyst for Bitcoin that involves resolution of the geopolitical situation, a strong bid in gold and silver, and a Fed who can just indiscriminately print to save the economy from either higher oil or, more believably, to print to save the Japanese? How much can they print? How much can Bessent pump into the system? A lot more than you think. A lot more. In other words, when I saw the numbers, it's not 5 to 10 billion like what he wrote on his notepad, that little publicity stunt. It's hundreds of billions potentially, with a lot of volatility coming in the fall. In other words, right now we're in a solar eclipse window. I think the solar eclipse is tomorrow. So you can have outrageous volatility in the next 10 days. Oil, an obvious candidate, bonds, equities, these things can happen in the short term, but we're going to make a call. We're going to say, okay, this is not just our base case, but these are the scenarios and our call. So rather than just say, if this, then that, we're going to give you some definitive discussions about oil, yen, and Bitcoin, because in our opinion, that is the story. That is the catalyst. Now, once those things are resolved or in motion, if we're right, partially or totally, that's when crypto can wake up. And of course, $200 oil means we're not right. And again, that's a very short show. Plus, alpha intelligence for tactical traders. I have finally figured it out, and I have got a set of examples that you are not going to want to miss if you're somebody that uses a 1 hour or a 4 hour time frame. Essentially, it's alpha intelligence DeMark style signals put together with something else like an RSI divergence or a Lux Algo Elliott wave signal, has produced some really epic results across macro, like recently. And we're going to go over those examples. The link for alpha intelligence, it is down below. And again, it's taking me a little while to figure out how to put it together with Lux Algo. And I'll give it to you simply. Lux Algo is probably like 4 hour, 1 day, and 1 week. But if you want to go like 4 hour or 1 hour, this alpha intelligence stuff is mind-boggling. It's a nice add-on. Again, the link is down below. Okay, so a brief news headline. The geopolitical guys, get ready for $200 a barrel. That's the heavy version. The lighter version is I think we did what we wanted to do in terms of blowing things up. Now, how do we get out of it without getting or looking like we're getting embarrassed? That's really the issue. The other issue is they are drawing down the strategic petroleum reserve massively. Now, I'll give you a hint in our call, just so you keep listening. Barring a massive, massive escalation that results in effectively a world war, the actual bid for crude oil doesn't come until later, when the U.S. has to start buying oil to fill up the strategic petroleum reserve. So as a hint on the forecast, everybody thinks oil's going to go up now and then crash on the deal. Our idea is that, well, yeah, if there's a deal, it goes down, but then everybody who's been depleting their SPR comes back in, and oil kind of normalizes, falls into a range around 80 to 90, and that's it. That's it. The actual bid is later, barring an end-of-the-world event. And again, an end-of-the-world event is a very short show. All right. Let's do some PowerPoint. Not too much for TikTok. But here's the call, right? Bitcoin can get to 88K in December. Dollar yen can go to 152. That's kind of where it is right now. And oil will be at 87. Check us in January. All right. So I'm not going to read all this, but like, what are we saying is going to happen and what's the conviction? So with the oil situation, we think there's going to be a managed reopening of the strait. It'll probably be unofficial, and it's probably going to be later in the year. The world can't live without oil, and the other side can't live without basic goods and services flowing through. So not the end of the world, but not embarrassment for either side. You know, oil is between 82 and 96. Now, of course, oil is trying to press the higher end of that range as we speak. But the idea is we have medium conviction that it's going to go lower on any cessation of hostilities and then higher after. So it's actually a buy on an extreme dip. Kind of crazy. With the yen, the idea is intervention alone. So in case you haven't heard, the United States came in and actually went into the foreign exchange market, joined the Japanese in selling the dollar and buying the yen to keep the yen propped up and keep it from going to zero. Okay. It's not going to zero, but you know, it's been falling like an altcoin that's out of favor. The general idea with this, with the yen, is that what is going to be the U.S. response now that it's gotten more and more and more involved? In other words, nobody in their right mind would think that, you know, Uncle Scotty's only going to come in once. This yen problem is so serious. 5 to 10 billion is, I don't know, it's kind of a joke. You know, they're going to have to do hundreds of billions to make that work. Hundreds of billions. And we'll tell you what that means for Bitcoin. All right. Essentially, what Uncle Scotty is going to have to do is go to the Japanese and say, you currently hold 1 trillion in U.S. Treasuries. Now, Japan has 2 ways to get the dollars that it can take and go into the foreign exchange market to try to prop up its currency. In other words, take those dollars, sell them, and drain yen out of the system. 2 ways. Sell the treasuries and get the dollars, or deposit the treasuries at the Fed and borrow dollars against it. In other words, Japan takes its bonds and we print money to lend to them. And we print and we print and we print and we print. And somewhere in here, we have this radical idea about September, October volatility, where in order to make this process more credible, the Japanese actually have to hike rates, which, if you remember going back to 2024, scared the daylights out of everybody. Not going to go into all the details on that. Everyone's like, oh my God, the yen carry trade. Nah. What I do know is if they come in, they hike rates with Uncle Scotty handing out money, no congressional authorization. You don't even really need the Fed for that, although the Fed's going to be involved. You could have hundreds of billions of dollars flooding into the market as a result of this. Because, one thing that's really funny is that there's a circular effect to this. In other words, when they sell the dollars and get the yen, they can turn around and take the yen and buy Japanese government bonds, Japanese stocks. There's kind of a circular effect to this that makes it really tempting to do at scale if the market tests them, which of course they will. And Uncle Scotty's been through this before as a hedge fund manager at Soros. Now for Bitcoin, if Bitcoin can clear 66, say in September, you can start a move to the max move is 95 to 105 by the end of the year if you get oil doing a normal range without any geopolitical apocalypse, obviously. And then Uncle Scotty running the printing press to save the Japanese. Because ironically, even though the headline this morning is about $200 oil, the situation that is really epically more serious and more imminent is what's going on with Japan. And that's where the printer comes in. That's why, I'm racing guys like Arthur Hayes to get this kind of stuff out, because he's saying something very, very similar, very similar. And this is an underreported story, and probably why Bitcoin isn't really tanking on any of these, on any of this bad news. Okay. How this geopolitical situation ends, Oman is probably the key broker. The Iranians get compensation in sanctions relief. In other words, they're not going to cooperate if they can't restart their economy. So again, that's Uncle Scotty, right? Uncle Scotty's just going to come in and be like, all right, well, we'll let you start trading again in dollars eventually. And this whole idea of like what ship can pass and what ship can't pass, that'll stop when they can start making money again. That's really the key issue. Like, we can't have $200 oil and, their economy can't crack any more than it has. That's probably an underreported story, along with what we discussed from Uncle Scotty, that the longer they play this card, the more the world is going to be incentivized 3 years from now to go around them, or, over the next 3 years to just go around that whole body of water, and capital will go somewhere else. That's not today's headline, because that's not what sells. Okay. And, there'll probably be an opening of the strait and you'll never know it. You'll never know it. They'll drag this out. They'll leave it where it is. And if it opens, it'll be a stealth opening. Now, just to be clear, oil is probably close to levels where you might start to get a little bit concerned, right? U.S. crude oil is now at 81. 82.50 is kind of an important level. Okay. Brent crude oil is near like 90. Uh, you know, 91 would be a very sort of interesting trade to the upside. You could be looking at in Brent, if you cleared 91, you could be looking at 95 and then 113, just to be clear about, what can happen, just so you know. All right. So we're not minimizing the oil situation. We're maximizing what Uncle Scotty's going to do to fix it. Because everything is about what's happening on the geopolitical front, and he's actually the one that drives what's going to happen, right? And the ironic thing about oil is the peace deal doesn't crash crude. It doesn't. Like, every country in the world has to fill up its strategic petroleum reserve, and the biggest reason why some sort of arrangement is going to get made is because the demand for oil after this is going to be big enough for all people involved, both parties involved, to make money selling oil to the world, as everybody has to refill their tank. So it's not that oil goes to 40. I mean, that was one thing I thought, but the longer this goes on, oil is almost like, it's like higher for longer. This whole idea that this is going to end and gas is going to go back to $2. I don't think so. You're going to have ongoing demand for oil, and you know what? That's fine. Okay. As long as it's not at 200, right? So it's at 90 for the rest of the year. So what? As long as it's not like, everybody's oil facilities is being blown up. Now, with that said, we're done with that, right? Because I think the big trade, even if there is $115 oil, is what goes on in Japan. Now, this potentially is a lose-lose if they screw this up. Dollar yen, the dollar just got to a 40-year high, or the yen got to a 40-year low, because foreign exchange is a teeter-totter, right? Dollar up, yen down. Okay. Uncle Scotty wants dollar down, yen up, or yen stable. And here's why they want yen stable. Tokyo has to keep buying yen, and for that, they need dollars. And the obvious source, again, is U.S. bonds. So we don't want the Japanese selling our bonds. We don't want the bond market to get any more jittery than it already is. And then if the yen, for whatever reason, rips to the upside and the dollar collapses, well, that's not good either, because a lot of speculators use the yen to borrow money, to go speculate, and we don't want that either. So we want a strong yen and a weak yen. We want a range trade in the yen. We want a slow yen, which is really much harder to do, which is why Uncle Scotty is going to be the one to have to engineer this, and frankly, engineer it big. It's going to have to be an ongoing thing. It's what I'm trying to tell you as it relates to Bitcoin. In other words, the headlines are all about, oh my God, oil's going to $200, and that can happen. Of course it can. I mean, at this point, $200 oil and 40K Bitcoin is known. It's absolutely known. There's no edgy take there at all. Now, what might be an edgy take is to look at Uncle Scotty's history from working with currencies when he worked for Soros. Okay. So in 1992, right, this was the year I started in the markets after college. Scotty ran Soros's London office, saw that England lacked the reserves and the political will, right, to hold up its currency. And at the time, sterling just cracked overnight, and he made $1 billion, which is, a lot of money in 1992. In 2013, they shorted the yen on a big trade and made $1 billion. And now in 2026, okay, he's defending the same currencies. Now, this is key down at the bottom. What he learned in 1992 now applies in reverse. Finite reserves lose in currencies. A defense only holds when the market believes the size behind it is unlimited. In other words, they're fighting the printing press. Bessent will not try to outspend the market. He will try to make it believe the dollar behind Japan has no ceiling. That belief has a mechanism, right? In other words, I think that got that jumbled up there, but he's got to make the market think that every time they try to sell the yen, they're going to run into the U.S. Fed and the U.S. Treasury's printing press. Good luck fighting that. Good luck. Now, of course, the market's going to test that, and the currency market won't just test it one day. They'll test it day after day after day, which is why a finite reserve, where everyone runs at like the Bank of England in 1992, ran out of money. They just ran out of money. And they're like, okay, well, we tried to hold it up and we're just going to have to let it go. And the move was just epic. Epic. I mean, seriously, the Bank of England had to call up currency desks and go, okay, whatever you're doing with our currency, just stop it in the open market. We'll trade with you if you need to do something. Please stop embarrassing us. I'm serious. That's what happened. They called currency desks and said, we'll be your counterparty. Please stop trading. Please stop hammering on this thing. That's what happened. Anyway, Scotty knows that they have to believe that money is everywhere and they will jack NASDAQ up. Like if you're wondering how NASDAQ did its recent spike, how the S&P made a massive new high with the threat of $200 oil, phony baloney AI debt and all this stuff. That's how they just injected it into the market. The Plunge protection team doesn't want equities to go down. And if they don't want it to go down, guess what? It's not going down. Because of the power of the printing press. Now, can you have epic volatility in September if there's a Japanese rate hike? If Bitcoin does go to 88K, can people survive the volatility? People are used to Bitcoin doing nothing. What happens if Bitcoin is trading in 5 to 10% ranges? What happens when Bitcoin goes down? It looks like it's going to zero. And when Bitcoin goes up, it looks like it's going to the moon. And there's this just unbelievable range trading and volatility. It's just an upward sloping range. Who's calling for that? Nobody, which is why I like it, right? And Scotty has already told you what the plan is, right? The Fed has a facility. I have to do more research on this, but they're calling it FEMA, the Foreign and International Monetary Authorities. I don't know if that's like a joke or it's a real thing, right? Again, Japanese make a deposit of Treasury securities and the Fed just prints money against that, just prints. So you repo, don't sell. That's what that term means, right? They use it to buy the yen and they recycle it at home, propping up their debt market, which, oh, by the way, needs to be propped up. The urgency of this yen thing cannot be understated. The reason the yen thing matters is because the currency is losing integrity and so is their government bond market. I mean, if that country with its debt situation can't borrow money, that's the end. That's the end of the third or fourth biggest economy on the planet. That's not going to happen. That's absolutely not going to happen. So there's no act of Congress, no act of the Senate, no vote by anybody, right? All they got to do is flip a button, change the terms of how they do business with each other with these treasury bonds, and boom, right? You have a very large amount of new dollars. Again, how big can this get? I don't know. You got $1 trillion in Japanese government bond holdings. So that means they can do hundreds of billions of dollars, right? The theoretical ceiling is 1.3 trillion, right? I think the national pension funds alone in Japan have got 230 billion in treasuries. The working assumption is like 150 to 400 billion can be drawn down, right? So it's not the cough, cold, and flu response, but it's not small either. It's not. Now, here's the thing that's funny. Bitcoin could freak out, obviously, if the Japanese hike rates. Bitcoin could freak out if the Fed is forced to hike rates. I mean, you don't need to watch a show to know that. But you do need to realize that whatever anybody does with interest rates is secondary to the amount of money that they are going to need to print to save the yen. And as soon as the geopolitical situation, it doesn't even have to be settled. Just the risk of $200 oil, every day that it doesn't occur, the risk of that goes down. And obviously, if there is $200 oil, we've covered that. But if there isn't, they can just slowly start doing this trade. And even if there are rate hikes, either by us or the Japanese, honestly, Bitcoin runs on liquidity. It doesn't run on the Fed funds rate. Bitcoin doesn't do well when bonds collapse massively, although bonds have collapsed and Bitcoin kind of has already seemed to have done its down trade. Fingers crossed. Bitcoin runs on liquidity, period. All right. So if Bitcoin follows the oil resolution, so it's like, all right, we're done. Bitcoin's got to clear 66K, 66.7K to be exact. This is a number that we've talked about. And again, alpha intelligence on Bitcoin futures coming up. So, October, Bitcoin's got to hold this 64 to 70 range. So it's got to take out 66, and then it's just got to it's got to hold this range that it's in. November, you could see it leaping over 70 because, you'll have that 4-year cycle crowd on your side. Non-Armageddon in the Middle East leaves Scotty and the printing press all that's left. Not to mention the fact that the Plunge protection team is going to be in due to the event in November. Obviously they're coming in. It's like, oh, gee, we have a huge excuse to print money with the yen. Oh, there's an important event in November. Oh, well, let's hit the button now. Let's hit the button in September, or let's hit the button at the end of August. Right. And there would be nothing like a good crisis short of $200 oil, a drop in equities, a problem with hyperscaler debt. A lot of times the problem with debt is more debt, more printing. It's like too big to fail. Another reason to have the Plunge protection team throwing money into the market in October and November. There can't be a problem with hyperscaler debt. There just can't be. It's too big to fail. Bitcoin has a shot at anywhere between 78 and 88, and sort of the base case, the normal case for crypto because of the Japanese printing is something like 82K. Now, if Bitcoin becomes its own beast because of the printing, you can get the best case scenario. The best case scenario is 92 to 100 in December. But there's a catch. There's a catch. Is that the volatility on the way up, you'd have to trade it on the way up unless you were just a hodler. You took the Toby mentality and it's like, I'm not selling. I've never sold. I'm just leaving it. But I think everybody else is going to have major puke factor. In other words, I'm not minimizing any of these other issues. You can have Bitcoin going up in a trend that shakes everybody out twice a week. I don't really, of course, in an environment where Bitcoin is doing nothing, it's kind of assumed that recency bias. It's assumed that Bitcoin will just continue to do nothing. I don't think that's true at all. Absolutely at all. And naturally, we're going to be watching, to see what Bitcoin does on any 5% spikes in oil. $100 oil would definitely be a test of Bitcoin, particularly if it can, say, hold above 62K and not go all the way back down to the lows. So here are some graphs that make this easier to understand. So right now, oil's at 90. Okay. And the Nuke scenario is that oil goes all the way up and stays up until the first quarter of next year at about $150. So it's not straight to 200, but the longer this thing drags on, people have to start buying oil to fill up their tank. It just trends to 150. Which actually, to me, I don't know. That feels kind of nasty. That feels nasty. Like everyone's like, well, it goes to 200 overnight. Okay, that's nasty too. But this whole thing where it just gradually grinds up all the way through the November event. Oh my God. So the general idea, assuming this current scenario is true, it can be challenged. The yellow line is, a dip to 75 and then right back to 90 because everyone's got to fill up. And of course, this is what the market thinks, which is probably wrong. This is the blue line, which is that the crisis is over tomorrow and oil goes to 60. I don't think that's right either because everyone's got to fill up their tank, period. Okay. Now here's Bitcoin, best, worst, base. So if you get a resolution on oil, and Uncle Scotty has to print, or they have to print because, oil at 90 is a drag or there's a hyperscaler problem. The best of all worlds, Bitcoin goes to, say, 75 in October and winds up at 100 by the end of the year. Now, again, this is just a dot plot. We assume there will be epic volatility starting in September. The normal case is that Bitcoin doesn't really do anything. It maybe presses 70. And then when you get the 4-year cycle crowd, everyone genuflex and it goes to 88 or 82. It's not unreasonable. And then, of course, there's $200 oil and yen calamity, and everything just goes to 50K or 40K. And that's the end, right? Because this all can, you can have an across-the-board nuke. I just don't think people are looking at what can happen if this sort of turns out, right? In other words, if there is resolution and Uncle Scotty has to do what we know Uncle Scotty has to do. Now, risks to the view, right? Japanese have to turn around, panic, and start selling U.S. assets. Okay? Japanese have to hike rates more than once. The Fed has to hike rates. Okay. And then you have some sort of some sort of issue where multiple other players over in the Middle East have to jump in because the other side has capabilities and leverage. And then, of course, this whole idea of Bitcoin losing 62 or losing that 60-62 area, all bets are off. It's a different regime. The 4-year cycle guys are right, and we don't know where the bottom is. Below 62 means 57. That's so boring, I can't even say it. 57 at this point would feel like the end of the world because there's no volatility at all. So, if we're gonna talk about this whole oil thing, let's maybe do it in a sensible way. In a sensible way. All right, we're going to be moving over to Alpha Intelligence now for tactical ideas. So I gave you the big picture macro PowerPoint forecast. All right, now we're going to move over into tactical trading, tactical views. So let's begin with crude oil futures 1 hour. This Alpha Intelligence guy, when he showed this to me, he showed it to me with a 1 hour chart of gold and silver. So I'm just pulling up. This is WTI, right? And you have this big down move. And I left some Lux Algo stuff here in terms of Elliott wave and support and resistance. So the 1 hour chart gets to its discount zone, also happens to be a big volume area. So, this collapse in crude invalidated these signals. So you did get stopped out. However, this is the whole idea of confluence. Let me get this for TikTok. There we go. Okay. So when you got this signal on top of the discount zone on this Lux Algo trend line, this actually turned out to be very powerful because this gave you the whole bottom in crude. And ironically, there are a couple of topping signals here with a 5-wave top. It's like, oh, yeah, maybe that little thrust up there was it. So this thing gave you the bottom. You had to sit with it for a while. You had to sit with it for like a day. And it's also kind of trying to give you the top, which I think is very interesting. And Brent, it was a lot cleaner, right? It was kind of like straight down, wick. And then I don't know if you had to wait a day. I mean, you had to wait. You had to sit there with it. But the geopolitical news was in your favor. And, I don't know what kind of a system would find this if you do this type of trading. Like if you do this type of trading. Bitcoin, interestingly, right? This is the Bitcoin futures contract. So this works off volume, right? You have this avalanche lower from 65 to 62 buy signal, pop back up, back down again, another buy signal. And this is how Uncle Scotty is probably going to print or is printing as we speak. Because frankly, with the situation as it is, Bitcoin should probably be lower. Famous last words. It might wind up being lower. But, because what is there to do in this market? What is there to do except trade on these 1 hour time frames? So, if you're into that, the link is down below because this thing is like the 1 hour chart tool. Even in long bonds, right? So you get this spike up. I want to say this was the jobs number. And it's like short it, fade it. Then it's all the way back down. Gives you the bottoming signal on this huge volume area. A good Lux Algo oscillator matrix signal on an oscillator. A little bit of divergence here where you get the new low in price, but no new low in the oscillator, along with massive heavy puking on this oil move. I mean, you took a very small amount of heat and then bonds turn around and actually did better. You know what I'm saying? I mean, this guy, when he's using it, he's using it to make kind of like, $1,000 a day doing some sort of like, doing day trading, but he's only taking these trades on with a good risk reward basis. I mean, gold is kind of unbelievable, right? I mean, there's 3 bottoming signals on the gold 1 hour chart. That's what this is. Small fake out here, but it came back again. And this was when gold was in the mood to trend. So, it's very interesting what happened when you saw this. And I know that TikTok probably can't see this and neither can you. But one interesting thing about these 3 signals is that they occurred at the end of like a 5-wave sequence. So, Lux Algo will only print the full 5-wave set after the 5-wave is over. So it's going down. Lux Algo says it's over. You get 3 of these signals. Maybe you take some profits here, but when that didn't work, gold exploded. And then you bought the dip and you could see people buying the dip here and then gold exploded. This is a 1 hour chart. I mean, if you're bored out of your mind, this is how you're making money. This is it. I mean, you can use the tactical stuff. using other methods, but I think this guy has got something here. And he's also a big silver trader. I mean, this seems very clear, right? Here's the bottom the bottom signals here. It's got a bottom signal on the Lux Algo oscillator matrix. Yeah, you had to wait. So, it's not immediate instant gratification every single time. You had to wait, but eventually this silver just exploded. Just went vertical. So you got a lot of gratification because you had trade location here. And, if you look at it, we're obviously not the only people looking at this, because you have the signals and then every wick down in silver futures got bought on a 4-hour chart. This is very clearly a key precious metals toolbox, which, makes it kind of a interesting add-on if you do this type of stuff, right? If you do this, what? Bitcoin's doing nothing, so you day trade gold and silver. And even in NASDAQ, which is super interesting, right? It worked best. Like, this signal didn't help out except for like a minor pop. This topping signal really didn't mean much, but what did mean much, and this is what I figured out this morning, and this is what the guy told me. He just talked to me about these signals and Confluence. And I'm like, oh, okay, I get it. So here's the NASDAQ, right? And this was, probably the big, hyperscaler / war down move. But if you look at this, Lux Algo marked it at the bottom. So Lux Algo marked it. And again, this is done after the fact, which is not helpful from an Elliott wave point of view because it moves over, but it is helpful with these signals, right? So Lux Algo inserts this and says, whoops, my bad. Lux Algo inserts this. 1, 2, 3, 4, 5. So Lux Algo says, okay, move over, but then there's his signal. And notice what they're doing in NASDAQ. And here's the signal, very much like the mark. And then they're just killing it. This happened in bonds at the bottom, and just destroying it. Yeah, this final heave, and then boom, it turns around. That was a very vertical rally in NASDAQ. And you know what? I don't mind telling you that even though it's totally contrary to what you might think, because everybody is very into this whole, sort of Armageddon viewpoint in our bond market. There is 2 of these signals on a daily chart of U.S. long bonds. Now, it's very hard. It's very hard to come up with a reason to buy U.S. long bonds because, we're doing $2 trillion a year, unless oil's not going to 200 and Uncle Scotty is going to have to print massively, like so massively that the Fed may have to be in and talking about hiking rates or inflation on one hand and printing on the other. Because if the Fed has to print for whatever reason, one of the things that they would prop up would probably be our bond market. Because to state the obvious, our bond market cannot fall apart with November coming up. Our bond market can't fall apart, period. Because, we're not really seeing any end to the housing market being totally locked. I don't know to the extent that they care. However, we do care. A nuke in our bond market creates a nuke in the hyperscaler debt market. And the hyperscalers are what's holding up the entire U.S. economy. So you cannot have a debt market blow up. You can't. In many ways you have, because if you go back to the chart and you just look at these candles, and it was the same thing on the NASDAQ bottom. I mean, don't just look at these candles and be like, oh, okay, there's a candle. You got to think about this, right? Long bonds down all the way back, long bonds down all the way back, long bonds crash, like it rallies, and then it's like it's going to go to zero. You know what I'm saying? Like if you had your stop at the bottom of this candle, they stopped everyone out, they destroyed everybody, and then they brought it back, and now, there's buyers down here again for whatever reason. This was materially lower earlier in the day. The point is, when you're at an extreme, when you're using these day trading signals, you have to use stops, obviously, but you have to have your stops in the right place. You also have to acknowledge, I think, when you're using these or any other signals, that they know where your signals are. They know where the signals are. They know where the stops are. And, you have to use these things as kind of like Confluence, right? Because, I think if we go back to the bond chart, he likes to use a regular RSI. You had a big new low in price here without a new low in the momentum indicators. That's how he likes to use it, right? This is called, it used to be like a secret tactic. Now it's all over Twitter. It's called Bull Div. So you need more than one signal in order to do this. The market update is only on the air for an hour a day. And if you have to track this stuff, which frankly you do, this is a very convenient discovery for me because, I understand that nothing is happening in crypto. I get it. And everybody's annoyed. Like, when I went looking to rank altcoins, okay, maybe I could find 30 worth of salt. Really? We're coming up to a level, by the way, in Zcash. We have a TA report in Patreon that lays out some very clear risk and reward there for both Bitcoin and Zcash. And of course, there's yesterday's stream where we talk about what altcoins we want to add, keep, or what altcoins have broken charts. That report is in Patreon for all members, including the free members. So we were so nice. I can't believe it. I got in trouble for being so nice that the written report about the altcoins that you want to keep, that have broken charts, that are in neutral zone, that's in Patreon. Hey, you can become a member for free. We would prefer you join us and get the real research, which has all the things about what to do in all these different markets, including Bitcoin, and how this gets resolved. I've sort of given you the hint that it's about the printing press. Frankly, it's always about the printing press. Let's see who's here. Okay, we have Zapatis first on the stream. Sir, I always appreciate, you seeing your name. Thomas Chai, appreciate you as well. Richard Barry. Yav is here. Wing Raven. Right? Sitting on my hands, not touching this. Love the Spartans, but I really don't know what to think anymore. Exactly. That's why I put this together. I got to come up with a view. Just Dario owns $200 oil. He does. He's like, it's going to 200. They're lying to you. This is much worse than anybody thinks it is. That could be true, but it's a very short stream and it's a very hard sell to a crypto audience. Plus, I don't know if it takes into account the amount of QE that's going to need to occur. Country Club Hillbilly, biggest underperforming asset, Bitcoin. Baby Whale is here. Wealth Ranger. And down we go. Right. Snooze. Zapatis reminding you to hit the like button. Shelly Farmer Allen, the one-woman hedge fund, is here. Welcome. Right. Seth, miss you too, buddy. SJ747. Please hit the like button. Charts at work. That's Steve J, the DeFi master. He's going to be right. It's going to be right. Bitcoin has now captured miners. Bitcoin devs sold out to the suits. Privacy is the sleeping giant. That is true decentralization. Dude, Monero, all these privacy coins. Oh my God. Wait until the machines start using them. I don't know what has to happen for privacy, but we know we're going to need it. Bitcoin is only good for pumping and dumping for cash money. The future is privacy. RBW giving Uncle Sugar a nod, right? Rave Song Records thanking me for the update. Thank you, sir. Thank you for watching. Tango FN is here. Joseph from Brazil, what's up? Somebody says XRP to 50 cents. Oh, dude. Everybody is piling on XRP. And, the XRP chart read was disturbing because, frankly, Ripple just let it break. I'm so mad, so annoyed, right? Odd Dark, a member, is in the house. What's going on? Union Crypto, Bull Runner jumping on the stream. Welcome. Mike Volmer is here. Welcome, sir. Good morning. Jesky is here. A member. Thank you. Andre, good morning, everybody. A1 Rising. He has done well with rare earths and miners refiners over the last 2 years. Yeah, man, it may be all about metals, which is very convenient because this Alpha Intelligence guy, like when he showed it to me, he showed gold and silver. I think that's what he does on a regular basis. And he's now just trying to like branch out in case he doesn't have a gold or silver signal. I mean, if you got to do this 1 hour chart thing, that seems to be the way to go, right? Everyone is waiting for Bitcoin and Ethereum to lead the way out of the ditch of this bear market. As usual, it's in the hands of sovereigns. It's in the hands of the Fed. And I actually think it's in the hands of Uncle Scotty because there is, frankly, an epic case for them to flood the system with liquidity. And I think Bitcoin knows it. That's the title of the stream. I think the only reason why Bitcoin is not falling apart, right, because there's no sponsorship for crypto, is that they see these liquidity events coming. No one's going to let NVIDIA go down. No one's going to let any of this debt, Oracle. No, they're not going to let that happen. I mean, they can let something dramatic occur, but that's just the excuse to come in. That's it. That's the excuse to come in. So short of $200 oil, in some ways, bad is good. Yen bad, Scotty in. Hyperscaler debt, Scotty in. Why do you think equities are holding up? $200 oil was on everybody's mind yesterday, and NASDAQ didn't even move. Didn't even move. I think because they know liquidity is coming. They have to do it. They have to do it. It's like this is the headline, right? This is a good example. So U.S. fires on ship trying to break the blockade. The AI bubble is cracking in place. Nobody wants it. It's not headline equity indices. It's coming apart one level down in credit, positioning, and in the accounting. Premium article, you don't really need the article. That stuff's coming unglued, and it can't. I mean, it's too big to fail. Now, of course, if it's not too big to fail, everything's going to zero, right? There is the everything is going to zero stream. And Just Dario, who I think is a super smart guy, and he's clearly got the narrative by the throat. Those guys control the narrative, period. I think he's a genius. He's controlling the narrative. He's like, AI is going to blow up. These stocks are going to blow up, and oil's going to 200. And I'm sure there's a lot of hedge funds positioned for exactly that. Now, I've always said as a concluding note, everyone looks for a crash in risk assets. I would argue if there's no crash in risk assets, the way this gets vented in the system is with a liquidity outpouring and a wild move up in Bitcoin. 2008, you got the big short crash. People expect the melt up in oil. I'm wondering if there's a liquidity driven melt up in gold, in silver. You know, Bitcoin is volatile in the beginning, but then next year it's just off to the races. And you're going to be asking yourself, why did I sit around at 60? I was at 65, worried about 62 or 57 while this was happening, while Bessent was telling you what he was going to do. It's like my old saying, and my concluding note is, you've been told. The Soros guy has told you what they're going to do. And we'll see if that translates into, you know, a forecast being correct. In the meantime, you know, you have your alpha intelligence 1 hour charts to play with. You know, the link is down below. I think you could try it for $7. Go check that out. All right, ladies and gentlemen, we appreciate each and every person. Like usually it's 1,200 people. For all of the 1,200 people who watch this every day, I thank you. We'll see you tomorrow.